How's it going, everyone? This video is going to be over wicks. I'm first going to talk about what wicks are on the lower time frame, and then talk about what it looks like for a wick to be respected or for a wick to be disrespected. So what are wicks? Wicks are generally a lower time frame reversal, or during a given time period, price had an aggressive reaction. So you can see here we have formed a wick. So that means during this given time period, the lower time frame went aggressively lower and then back higher. So you can see here, price made an aggressive move lower and then back up, and that's how wicks can be a reversal on the lower time frame. Now, what areas do I mark out with wicks? The main focus for wicks is marking out 0.5 of this wick from the body to the low or the body to the high. In this, I'm going to want to see the upper half of the wick support price higher or the lower half of the wick support price lower. So you can see here, in this case, the lower time frame price action is shown. And you can see the next candle opens up. We respect the upper half of this wick and then trade higher. Here you can see price opens up on the lower time frame, trades into this wick. It has a reversal that is formed and then trades lower. So it respects the lower half of this wick. Now, what does that look like on the higher time frame? Well, when we combine that lower time frame into its higher time frame candle, we get left with something like this. So you can see the lower time frame opened, made a low, formed a high, and then closed, all while respecting the upper half of this wick. And you can see with the bearish example, price opened, formed a high in the lower half of this wick, and then traded lower. So what does it look like for wicks to be disrespected? So if it is going to be respected, price will open, form a low, and then trade higher through the given time period. However, if the upper half of this wick is not respected, then it is likely to trade to this low. So you can see here, we do form that open low, we can't go expand, we get a reversal, trade through 50% of this wick, and then we go and trade through the low. And similar thing here, you can see we don't respect the 50% or the lower half of this wick, and then we eventually trade through this high. So on the higher time frames, you can see this wick level here was inversed, and then we trade lower. So let's hop into some charts and go over a few examples of what this looks like. So let's first go through some examples in which price respected the wick. So you can see here, price takes out the low and closes back into the range. With my daily bias video, I'd be looking for price to trade higher. Now, higher from where? Well, with a reversal candle like this, I'm going to be focused on price respecting the upper half of this wick. So I'd want to see price trade into this area, open, form a low, then move higher, and then close. So if we drop down to the hourly time frame from the daily time frame, let's take a look at that. So here we are on the hourly chart. You can see this is our previous day low that was taken out and closed back through. Now, if we're going to trade higher, I'd want to see price respect this upper half of the wick. So I'd want to see open, low, then trade higher into these highs before closing. So as we continue, you can see we are forming a low. We have open, low, we get expansion higher, right? So you can see on this higher time frame here, if we draw this out, you can see how the higher time frame candle respected this wick, right? So we get the open, low, high, and then wherever it closes, and that's what it looks like on the lower time frame. Let's hop into a few more examples. So once again, you can see price traded into our previous day high, has swept that out, and then close back inside the range, so I'd be looking for price to trade lower the next day. Now with this closure, I'd want to see price respect 0.5 of this wick, so marking that out right there, I'd want to see open, high, low, close, and once again we'll go to the hourly chart to take a look at this. So here we are down on the hourly chart. You can see we have that closure inside previous day high, giving us that nice large wick and a closure back inside the range. That is paired with a change in the state of delivery, and I've marked out 0.5 of that wick. So if price is going to trade lower in this next day, I'd want to see price form a high in the lower half of this wick to expand lower. So as we let this play out, we are getting some consolidation here. We then sweep the high in the consolidation, and then we start to expand lower. So you can see we opened, we formed a high in the lower half of this wick before expanding lower into these previous day's lows. For our next example, you can see we are on the hourly chart here. we have price reaching into a fair value gap, forming a closure right here, back inside the previous candle's range. And what do we notice? We have a nice large wick. So if we are going to have price expand, I would anticipate a wick to form in the upper half of this wick. So when I drop down to the 5-minute chart here to take a look at the hourly, you can see that if price is going to expand higher, I'd want to see an open, low, high close while not going below 50% of this wick. So as we let this play out, you can see price opens, we form a low in this fair value gap, and then we expand higher. So as we let this just continue to play out, we get a nice expansion out of the upper half of this wick here. So here we are in our next example. You can see we have just taken out this high to our left, and we have price closing back inside the range here. So if I'm looking for price to trade lower, I'd want to see price respect 0.5 of this wick here. So let's drop down to the 5-minute time frame. So here we are on the 5-minute time frame, and if price is going to trade lower, I'd want to see price open, form a high while respecting 0.5 of this wick, and then trade lower. So as we let this continue, price open, goes slightly lower, and then I want to see if it respects this wick. It does not respect this wick as it is closing over. Now it is more likely to reach for this high than go and respect this wick and then expand lower, especially after already taking out its previous candle's low. So as we let this continue to play out, you can see we then get an expansion in that direction. So this is an example of when a wick is disrespected or this reversal fails. Let's go into a couple more examples of these. So here we are on ES hourly chart, and if price is going to trade lower and respect this wick, I'd anticipate it to do it where? In the lower half of this wick. So let's drop down to the lower time frame, in this case the 5-minute, to see if that occurs. So here we are on the 5-minute chart. Price has formed this little reversal right here. So let's see if that is respected. And you can see right away we are closing over 50% of this wick and inverting this fair value gap. So now I would say it's more likely to take out this high than it is to expand lower. So as we use this as a support level now, after inversing 50% of this wick, we then trade higher to take out this high. So let's let this play out a little longer. You can see we start to expand higher from there. So in this next example, we are on gold hourly. And one thing to notice is we are in this consolidation range. We've taken out this high and we have not taken out this low. So you can see right here, we do have a nice wick, respects 50% of this to trade lower. And here we have another candle with a nice wick. So this could look like it's going to trade higher. Obviously with the context of we're in a consolidation, that makes it lower probability, but let's still take a look at it anyways. So we have closed back inside the previous candle's range. I'd want to see if price respects 0.5 of this wick. So let's go to the 5-minute chart. So here we are on the 5-minute chart, and as price opens up, you can see it starts to trade lower and immediately just falls through 50% of that wick. So it is not likely to form an expansion candle within this given time period, as this would form too large of a wick for an expansion candle. It's more likely to take out this low. And there we go. So you can see consolidation lows were then taken out, but this is another example of when a wick is not respected. So here we are in our last and final example, and what do we notice here? Price respected the upper half of this wick here to trade higher into this fair value gap. After reaching into this fair value gap, price then closed back inside the range of its previous candle. So if price is going to trade lower off of it, where would we want to see price respect? We'd want to see it respect 0.5 of this wick. So as we drop down to the hourly chart or the lower time frame, you can see here on the hourly, we do have a change in the state of delivery for this hourly reversal, and we do have some failure swings here. So if price is going to form a high, I'd want to see it form it in the lower half of this wick to then trade lower. So you can see at the start of this candle, we trade lower almost immediately. Here we do lack an upper wick, so we may revisit that, but this is a nice move for this expansion candle. Now, if I was focused on the New York session, we do come back up, we form this upper wick, and we are heading into the New York kill zone. And what do we notice? We have price respecting this candle here. So same thing here. If price was going to respect or move lower, I'd want to see it respect 0.5 of this wick. So dropping down to the 5-minute time frame. Now down here on the 5-minute time frame, I've marked out 0.5 of this higher time frame wick, in this case the hourly time frame, and ideally I'd want to see price respect this area. Now you can see with this closure over, to me it is more likely to take out this high than to expand lower. So I'm either not going to try to catch this reversal up here or wait for more confirmation with a close below here. So as we let this continue, we do get this close below here. So if I did want to still try this trade out, I could look to enter on the close, my stop on this high, and then targeting 2R. So as we let this play out, you can see there we do go hit 2R. Now the reason I wanted to show an example like this is it's not always going to be perfect, right? There are going to be times when price closes over this level and it still expands lower. There's going to be times where price respects this level and then right towards the end of the candle it runs it out. Nothing is going to be just perfect all the time. And so there are things to do where I look for extra confirmation or less confirmation depending on what the lower time frame looks like. However, I hope you enjoyed this video on Wicks. If you did, please consider liking and subscribing, and I'll see you guys in my next video. Have a good one.